Well, folks, a year has come and gone in our asymmetric trading system. This is a program that had its genesis well over a year ago as I went to an investment conference in Turkey and was able to meet with some hedge fund managers and look at what they were doing and how they were applying trades with respect to managing risk. Now, as a trader, we're always looking for bigger and better return potentials. And of course, along with that comes generally heightened risk as well. And so the idea behind the asymmetric trading system was to create asymmetric opportunities. In other words, risk a small amount to gain a large amount. Would that be possible to be able to build a system that was really focused on managing risk first and foremost? And so that was sort of the dual fold mandate that we set out January 1st of 2021 as we started on this journey. And it was to manage the risk, to focus on risk management above all else, above even making money. If we can make money, that's great. But the first and foremost goal here is to say, hey, I want to be able to put my money someplace where I'm not worried about losing it, right? So risk management was the number one priority. And then B, the second priority that we had was to attempt to beat the overall market. And that's pretty much the goal of any trader out there. During my time on Wall Street, during my time in venture capital, and as a stockbroker, that's pretty much how anybody on Wall Street got compensated well. If you could beat the market's returns, you were a superstar and you got compensated well. And that's really the sales pitch for anything, any mutual fund, any managed investment on Wall Street is, hey, we all know that you could take your life savings and go stick it in the SPY and just let it be unmanaged and get whatever the market's going to give you. But we're amazing traders and we can have amazing research that can give you edges and advantages that the unmanaged passive approach can't give you, and we'll beat the market. Well, of course, we know the reality is that 90+% of fund managers do not beat the market, the passive unmanaged market index over the long haul. So it was a pretty challenging goal to not only A, be able to beat the market, but B, do it at a lower risk or lower standard deviation. And we succeeded pretty well at the end of this year, looking at our results. So here are our results for the entire year. You can see just month by month what we were able to accomplish there and how we were able to accomplish it. We had one bad month right here, down 2.46%, and we had a losing month right here in June, down just a little bit. Now, that was a big distinguisher for us right there in March. The market made 4.2%. Great month for the market. We were actually down 2.46% for the month. June, again, not as bad of a discrepancy. The market was up 2.2%. We were down just marginally on the month. But ever since then, it has just been an absolute gangbuster result for us. And you can see the tallies there at the end of the year. We essentially doubled the market's return, and we did it by taking approximately, over the year's period of time, an average of about 70% less risk. Now, how is risk quantified? There's a lot of ways that you can quantify risk. We quantify it by looking at volatility, looking how big of a daily movement over a 1 month period of time the market has, and then comparing our volatility or our movement to the market's movement, right? So this is basically a standard deviation test. And we have averaged some months 30-40% less volatility. Some months we've averaged 80-85% less volatility. But over the year's period of time, based on a standard deviation model, we've averaged about 70% less volatility. I started my account, and again, these are all real numbers with real money in a real account that we have documented each and every month here on the YouTube channel. I started on January 4th of 2021. I started with $25,401.09. That's what I had. I'm not really sure why that was the balance that I had, but that was the number that I had as I got started with the program. And then on March 8th of 2021, I did add $1,500 of cash into my account. And so that was accounted for in the rates of return for March. That number was subtracted out to make sure that everything was equated properly for that number. But all said and done, again, I started with $25,401 and January 4th and finished the end of the year, December 31st, with $51,523. It's been an absolute pleasure to be in the system. And again, the goal of the system, number one, was to make a investment approach that was simple. You don't have to understand complicated trading strategies. It is pretty much a paint by numbers approach. If you can follow directions, if you can read, it's pretty straightforward for anybody to be able to replicate the model portfolio that I establish on a day-by-day basis. Number two, we wanted something that was not time-consuming. Each morning, we will have a new set of additions or subtractions to the portfolio, the model portfolio, and it can be anywhere from 1 or 2 trades up to 10 or 11 trades. So I think the worst case scenario for me was about 8 minutes. It took me about 8 minutes at the opening bell to get all of those trades entered. Generally speaking, it's going to take you somewhere between 2 and 8 minutes a day to get those trades entered. And then you close your laptop and walk away. This is not a system that you need to monitor on a daily basis. It is very passive in nature and doesn't require a lot of screen time. That's beyond the risk management, beyond the stellar returns that we've had. That's one of the primary reasons that a lot of our members are following the system, is that it's not very time consuming. They don't have to sit in front of a screen and stare all day long. Number 3 obviously was the risk management aspect, and number 4 was the goal to beat the overall markets. But we had an absolutely just stellar year. I don't know, again, what else to say about it other than our numbers were off the charts. One of the aspects of this approach with risk management is that we can benefit. We can make money when markets go down. We have the ability to be short just as well as being long. And so ideally, it would make sense that this program, the AST program, would shine its brightest during market downturns. Now you can see that a little bit here. September, the stock market was down 4.76%, and we were up 6.13%. But we don't have a lot of opportunities here. January, the market was down 1.1%. We were up 4.84%. So obviously, if the market is going down, the market is losing money. That unmanaged passive index is losing money. We have the opportunity to make money. So if the market loses 1% and we make 1%, well, that's a 2-point swing right there. So our system really has never had the opportunity yet, as amazing as the results have been, our system really hasn't had the opportunity to stretch its legs yet, because the market's only had a couple of bad months the entire year of 2021. If we could get into a string of a bear market where the market was down for 5 or 6 or 7 months at a time, my goodness, we're all sort of salivating at that opportunity to see what we could do with those situations. But nevertheless, it's been an absolutely just stellar year for us here. I can't just say enough about how pleased I've been with the results. We've doubled the market performance with less than half of the risk. And so it's been an awesome year for us. We're already off to a decent start with our January 2022. We are beating the market, and we are doing it at less risk. It's been a little bit of a bumpy road here for the very first week out of the gate, but that's sort of a function of what the market's been doing as well. But anyway, very excited for 2022 and what it brings. We're going to continue to try to enhance the program. We have continued to work our model and adjust our approach to managing risk and bringing in returns. We'll continue to do that. We're going to continue to try to refine. And as we find more things that work that fit into one of those two dual mandates of either lowering or reducing the risk or bettering our potential at beating the overall market, we will continue to add those into the mix. So it's a continually moving target in terms of, it's never going to be a completely refined system. We're continually trying to tweak it and refine it and improve it and hone it. But it has been just a blessing for me and so many people. If you are interested in the program, here's a link right here, and I'll put a link in the description below as well. We do have a 2-week free trial that you can check it out. Again, a couple of things to think about. You do really need more than $30,000 to trade the system because we diversify out quite a bit over quite a few different positions. And so you need at least $30,000 to make that work. And then ideally, it is not that well suited for IRAs. If you have an IRA at Tastyworks and you have the Works options permissioning level inside of your IRA, it can be made to work. But again, one of the benefits of the program is that we can go short different positions in the marketplace. We can do bear market trades, and that's not a possibility in IRAs. So we can have a little bit of a workaround there, but ideally it is best suited for non-qualified plans. But if you want to take a look at it, you can go ahead and check that out. Again, been an awesome year for us this year, and we're hoping for the same. If we could do the exact same result this year as we did in 2021, I think we would all just be absolutely thrilled with that. So I don't know if we're going to or not, but again, we're off to a good start.